What's up, y'all? I know it's been a little minute since I posted that last video. It's been maybe 2 weeks, about to be three. But I don't know why I've been a little bit lazy wanting like posting the videos. I haven't been wanting to record even though I've had time to. But that's why I'm gonna mix the 2 weeks that I've missed into this one video and show you guys the progress that I've made within these 2 weeks that have passed. So firstly, as you guys can see, we're in my TX3 funding. You can see here that I'm finally on phase 2. What I'm gonna show you guys is the progress that I made with the first phase, which I had to make $10,000. As you guys can see, I passed it already. Ended up finishing with $110,000, 110.30, and this is how it went. Cause we're gonna see. Uh, wait, forgot where. Oh, here it is. This is how everything went. So we're gonna see the beginning. In the beginning, things were very, you know, inconsistent. So as we can see here, I was losing. Lost 800 a trade, lost 1,000 in a trade. Then I won a little bit, probably break even. Then I won 2,000. Then I lost 600. I won 2,000. Then I went on a little streak. And most of these trades, I'm losing more than $500. Mind you, I don't think I realized yet that I can only make 2% a day. So I'm risking a lot more than I should, realistically. Risking 700, 700, 700, 500, 500, 500. I went on a losing streak, as we can see. 1, 2, 3, 4, 5, 6 trades I lost in a row. And then boom. This one shit started to change. Slowly. I won 2,000, break even, and I lost only 463. So y'all once getting accustomed to it. But I wasn't fully secured yet, because we're gonna see now in a little bit. Won 1,500, won 2,000, lost 500. So far, so good. Won 2,431. Okay, and I raised the risk 600. Mind you, for the week or week and a half before I passed the first phase, I was only risking $500. I wasn't risking 600, 700 anymore. I was risking 500 because I knew with my risk to reward ratio, I've been averaging one of fours realistically, one of fours to one of sixes. But I can't get more than a 1 to 6. I can get a 1 to 3 to a 1 to 4. 1 to 3 if I'm risking 600, 1 to 4 if I'm risking 500. But I was averaging 1 to 3, 1 to 4 very, very consistently. So I told myself, why am I going to risk more money when I'm showing that I'm capable of getting a 1 to 3, 1 to 4 consistently when I win? So let me just stick to that and stop changing it. So yeah, after this one right here, this $700 loss, I like locked it in, won my next 2 trades, and then I went on a losing streak. As you guys can see, I was doing very, very good. The week before was very, very good. And then I had this losing streak. Mind you, this losing streak wasn't fully because of the strategy. It was mostly because of my mental. Most of these trades are within 2 days of trading. As you can see, it's 1, 2, 3, 4, 5, 6 losses in a row. Mind you as well. Two of these is actually one trade because I saw, oh, I can get a better entry here, and if it goes down, I can just exit the other one. I'll make more profit. I'll make it back. Fine. Then I end up doing that. Ended up losing. But as well, when I did that, I was mentally prepared to take the loss. Thankfully. Because then right after that loss, I took one more. Because it was these two. And then I took one more loss. But it didn't stop me. Stayed consistent. Realized what I was doing wrong. Realized these two losses were on a Sunday night. Oh, Monday morning, if you want to say. Yeah. This one was Sunday night. This one here was at 11:38 p.m. Wasn't even London session. It was like barely getting there. Entered, lost 500. Then at 3 a.m., did another one, lost 500. Then The day after at 1 a.m. lost another one. Lost around 600, but wasn't because of how much I put up to risk. It was because of the slippage or spread, whatever you want to say. And then the day after, same time. But this was a trade I took in the morning, early in the morning, and had it within the day. And they both closed, and I lost 1,000. There it hurt, realistically. Mentally hit me a little bit. But now, like literally 2 minutes passed, not even, and boom, I knew I'm good. I was still up $6,000. I learned what I was doing. What I was doing was wrong, and I need to change my mentality and how I'm going at it in the market. Into the next trade, I lost. At this point, before the old me would have genuinely lost everything at this point. I would have given up and mentally checked out 100% because that's what happened before in the past. When I've had a good ass week and I'm super green, super positive, but then I have that bad start or that bad week and then everything goes to shit. But this time, I didn't let that shit happen. I ended up opening another trade sometime in the morning around 9 a.m. Oh no, that's close time. I opened it at 10:30 p.m. and closed in the morning because I had gone to sleep and it closed by itself for a total of $2,642. And if you do the math here, we'll round it up. Put five, that's 1,000. 600 was 500. 2,100. 500, 500. That's 3,000. We'll say 3,200. I've already gotten rid of more than 60% of the 6 losses with one trade. I made 2,601 and 3,006 losses. Think about it. But look at the change that I made with one trade. All the bullshit that maybe I could have been stressing over. All it took was one trade. All of it's gone. Now I'm back at square one of how I ended the week prior. Now I'm back at square one, middle of the week. I have one more day. How does it go? I ended up winning my next trade, which ended up being the final trade for that account because that's the one I passed on. And that's where I hit the $10,000 mark. And then we go to the account that I'm in now. I had taken 3 trades already, as we can see. It only shows one day, but that's because I made 3 trades in one day, but it was 2 different sessions. I took 2 in the first session, in London session, lost both, and I took 1 New York session in the morning. I won that one, and I made up for both losses and made profits. So as we can see here, look at that, risking only 500. Yes, there's sometimes where you're gonna lose a little bit more, but it's normal. I lost 500, 500, like around 1,050, right? Next trade, I make 2,575. Got a 1 to 6. Bueno, 1 to 5. Got a 1 to 5, as you can see. So basically, what it's showing is that I can lose 5 trades in a row, win 1 trade, and be break even. Or I can lose 2 trades, win 1, I can be in profit. Because the risk to reward is so consistent and I'm not constantly changing it. I've shown and proven to myself that I'm capable of making up for my losses, so why stress about them? Just because I'm not gonna stress doesn't mean I'm not gonna learn from them either. If I see that I'm making a mistake and that's why I'm losing, I'm gonna pay attention to that and I'm going to change the cause of those losses. So that therefore when I take the next trade, the probability of it being a winner are a lot higher than the ones before. So right now I'm in profit 1,500 on the account, and realistically all I need is 3,500 and I pass. Today I was looking at a trade earlier which would show here. Here. I don't know if I can there. There has to be some kind of there we go. Okay. As you guys can see, there's a big rejection at level here. And there's on the higher time frame, like the 15-minute and 1 hour, there's a zone. This is why I have it marked up. Price ended up coming back, having a small uptrend to this area over here. And what I was waiting for was a push, which uh it had here on this drop, boom, and then created not just a bearish engulfing, but also a bullish engulfing, and it broke the previous high. What then I was then looking for was price to break below, make this into an inverse fair value gap, and then come back, retrace, and show rejection. Right? So I change the color now. Whatever. So as you guys can see, I don't know if it's super clear, but it's very choppy, it's consolidating. So I didn't end up taking the trade. One thing that's been messing me up a lot on the losses that I've been taking, that I force when the market is looking like this. These right here, why I'm losing, because I'm going to a point to where I'm forcing something that isn't clear. If it's clear, it's gonna look how it is over here on this one. As you guys can see, I took a trade here, right? So you guys could have a bunch of trades for examples that I've taken, like this one, which I took yesterday, which was my winning trade. It's way clearer here. And why is that? First of all, this is a perfect example. Here is consolidation. That's clear as day consolidation, right? And then when you look over here, way more movement and clear with what's going on, right? As well over here on this side, right? You guys can't see it fully. I can I'll put myself over here for. But you guys can see that these moves here are way clearer than the movement noise in the middle. So back to it. I've been realizing, for me personally, when I enter when I enter in the market, when it's moving like this, I tend to be in a better position to win than I am when I enter in a position like this. And why is that? It's because when prices like this hasn't decided yet where it wants to go, and that's where, I'm sure I'm not the only one, that's where other traders that are trying to learn and trying to get good entries, that's where we mess up. Because there's not any direction, it's just there. And when you enter in the middle, price realistically can still go wherever the fuck it wants because it still hasn't even decided. Right? It's like it's like you're asking someone for a question and they haven't even answered, given any idea of what they're gonna say, and you just assume one thing and you go for it, and then they tell you and you're completely wrong. And all you have to do is just wait those 30 seconds, maybe 5 minutes, for them to be like, oh, this is what I want to do. And you would have gotten it correct. Obviously there's a possibility they switch their mind, change their mind last minute. But realistically, if you wait just that a little bit of time for them to give you the response, and you realize, okay, this is what they want to do. This is what I'm being given right now. As in, this is what the market's showing me right now. And it's showing me it low key wants to go this way. I'm saying low key, but like obviously there's a lot more confluence in it. But as in a conversation, let's say you're talking to someone and you ask them a question, you're not gonna force their response and be like, okay, this is what they're gonna say, even though there's no context behind it. You're just, no, I can't wait, so I'm just gonna answer it for them in my head, and I'm gonna go off of that. And then you're gonna get caught off guard when they give you the response, as here. What did I do? It rejected. It rejected, but it wasn't clear. But what did I wait? I waited for it to tell me again that I wanted to go lower. So once it came up and closed in the zone, showed rejection. Because here was noise. Here, it went in the zone, but it didn't close in the zone. It didn't show true rejection. It showed uncertainty, because realistically, it never went. It went in there, but not fully. If it would have closed and still rejected, that is a rejection. Because realistically, if it's just a wick, price never was in, like, set in that zone. It's really set in the zone. It sounds confusing, but if the candle never closed in the zone, it was never set there. It never had the initiative to go above. But if it closes in the zone and then it fails to go even just that little bit higher to break it, then that means for certain that that zone is strong and it's there for rejection. But if it's just a wick, realistically, it was never there at the highest peak and closed at the highest peak and gave the potential to go higher. It was just there because, as you can see, what did it do? Yes, it did the wick, pulled down a little bit, but then it shot straight back up. What did it do when it shot straight back up? It closed in the zone, rejected, showed a bearish engulfing candle. Same shit here. But the thing was, this one was way more powerful. Why? Why was it way more powerful? Firstly, this push, tell me which one looks stronger. The one that took 8 candles to get to, or the one that took 3 candles to get to? 3 strong bullish candles, or choppy candles that had a mix of bullish and bearish. Which one looks stronger? The second one. And then the zone here. Which one has more quality? Big bullish candle, small doji. So the bearish engulfing is Why is it Because it didn't have a clean break. Yes, it was bearish, but look, the wick is 40% of the body, right? Realistically. And it closed now with a small wick at the bottom, but a longer wick than it is at the top. Here on this one, it had a clean push, clean close in the zone, and a clean bearish engulfing candle. What did I do? I saw, okay, it communicated again to me in a clearer way to where I can fully understand what it's trying to say. So I'm going to take the initiative here. Now that it's done its job, it's time for me to enter. So I entered here, right? And then I looked at the previous area of where price would most likely go if it does sell. Realistically, I saw here. I'm going to be honest, I might take profit where you see it, right here. But I was being realistic as well. If there's this fair value gap that's yet to be touched for this this final bearish candle, there's a possibility price might support off of here and go back up, or do this and show potential support. If it does that, I shouldn't be greedy to want to hold for this extra $200 to $500. I should just leave it alone, close early right here, and let it be. But fortunately for me, just sliced through, went straight to my take profit. I don't know if I explained it properly or explained it in a clear understanding, but I do hope that helped in a certain way. And just in case that this one didn't help, no, don't save. No. For example, mm, do we'll do this one. Okay, higher time frame, because this is in the 5 minute. Because every time I enter, it's on the 5 minute. Oh no, because it's gonna do that thing again. Annotate. Boom. All right. So as you guys can see, it was a buy. There's a zone down here. The zone was there because higher time frame most likely had a area of interest which I was waiting for, and it came to price. Boom, came down. Had that bearish fair value gap, ended up breaking above, coming back into that inverse fair value gap because now it's an inverse because it broke above and became a bullish fair value gap. So it's therefore an inverse fair value gap. Came back down and was showing possible bullish intent. And I already knew in my head we're at an area of interest where price is going to be a bullish movement off from. Wait, we're at an area of interest where price should most likely support, as I saw in the higher time frame, or in an uptrend. And this is a very high probability area of interest to push to the upside. But since I knew that, I already knew on the smaller time frame, this downtrend is just noise. It's not real. It's just retracement on the higher time frames. So knowing that, I already knew. All I need is proof that price has any sort of confirmation to go to the upside. And therefore that's what it did. Because what do we see here? We see a big push to the downside. Again, 3 candles. 2 of them were minor, but then we had this big bearish engulfing candle which broke below here and created an inverse created a fair value gap. So I'm thinking, okay, it can go in here, show rejection, and continue the downtrend on the smaller time frame, and then therefore break the area of interest on the higher time frames. But it didn't. It ended up going into the zone right here, and then pushing to the upside. And if you can see here, there's a little bit of a balance. They couldn't make a straight line, but you guys can see that price slightly closed above this high. Though it became the new lower high and lower low, price broke above and created a potential higher high, and therefore didn't make any lows because it went into the inverse fair value gap and showed support, therefore creating a potential higher low. And I was paying attention to the price action and seeing everything, and I saw the bullish doji candle and an inverse fair value gap failed to make a new low and made a new high. What did I do? I entered with stop loss below the inverse fair value gap, gave it a little bit of leg room in case it wants to come and sweep it just a little bit. But as we can see, I went into drawdown a little bit on one candle, but after that, went straight to TP. And it's as simple as letting the market communicate with you and show you what it wants to do. And I've been practicing to learn that as well because there's been many times where I'm forcing something. Like I'm asking them the question, but I don't wait for them to respond. I just assume and move off my assumption. When realistically, if I just wait just this 5 minutes, just wait 5 minutes, maybe 30, but who cares? If I just wait instead of assuming, then I'm gonna be right most of the time. Why? Because I'm doing something off of what they're telling me. If they're telling me they want to go here, they're most likely gonna go here. Yes, there's gonna be times where they change their mind last minute, but everyone does that. I'm sure there's been a time where you say, "Yeah, let's go here. I want to go there," and then the day comes, and you're like, "I'm not gonna lie, I don't want to go anymore." That's literally what it is with the market. You may think it's not possible. You may think it's oh, it's a market. It has no feelings. It has no thought process. But realistically, it does. The market is gonna fluctuate and do different possibilities, have different patterns, and there's gonna be times where it may show everything that it wants to go bullish, go to the ups, like go bullish, go to the upside, and then it ends up completely breaking and going to the downside. And then there's times where it does the same thing, but then it actually goes to the upside. And yes, it's very inconsistent if you think about it. But if you stay with the same risk, stay with the same strategy, same thought process, same rules, and the same risk to reward, you're gonna make a lot more profits than when you lose. Because as you guys can see from my progress, I can lose 6 trades in a row and make most of it back with one trade, which I did twice. So it's not luck. And when I say twice, I mean go on a losing streak and make most of it back with one trade. So it's not luck. I've proven to myself it's not luck. Proven to myself I can take a losing streak and make up for it with 1 or 2 trades. So therefore, I have no excuse to be like, oh, I have to change this. No, because I've shown to myself my strategy works, and what's fucking me up is my mindset and how I'm going at it at the market. Because there's times where I'm assuming and making a decision off of an assumption instead of waiting for the response in order to actually enter. And sometimes that response, I'm not gonna like it. I'm gonna be like, you know what? I'm not gonna enter today. Leave it, leave it alone. You can do what you want, but I'm not gonna be here for it. There's gonna be times like, you know what? I like what you're giving me. I'm gonna be here. I'm gonna enter this. And it's as simple as that. Realistically, I think that's the best example I can give because it's low-key understanding, being able to understand them and read what they're giving you and make a move off of it. It benefits you basically because this isn't a person. Then they're not gonna benefit either way. Whether you win or lose, they're benefiting. But you're gonna benefit off of simply just being patient and waiting for their response. And off of that, I think I'm gonna just end it there. Cause yeah, I feel like that was a good analogy to use. But yeah, I'm gonna catch you guys on the next video. Hopefully this week. And let you know how it goes. Dale.